Welcome back. As always on Wednesdays, we start the day with Mark Bertoli from Abbott Wealth Management. It's great to have you back on the show.
Yeah, it's been a little while.
It's been a while. You look like you have some color.
Well, possibly.
Good. It looks good.
Yeah.
It's that time of year where the rest of us are so white that it's nice to see.
Well, you know what? I've been snowmobiling up in the sunshine in the Alpine. It's
Makes
beautiful.
a difference.
You
nice.
bet.
So we're talking today on the show a little bit about recent industry meetings across North America and the market movement.
Yeah, well, there's been lots going on for sure. And January is typically a time, I spent a few days in Toronto meeting with Ryan Bushell from Leon Fraser, a dividend manager here in Canada, Kim Shannon, a brilliant mind here in North America. Then I was down in the States with some of our other managers and just getting a feel for what's going on in the markets and so on. So it's very interesting. And one of the themes that came across is, unlike 2008, there isn't the systemic problems that were going on. So 2008, we had the debt crisis and a lot of money that would never be paid back, and it had to work its way through the system. Right now, we've got an oil problem and an Alberta problem, which is very, very isolated in certain areas of the economy. However, as we've discussed even in the fall, it is actually a stimulus for other areas of the economy. So companies in the U.S. is raising interest rates to slow down their economy, and in Canada we're lowering interest rates to spur our economy. So that's been a big thing. The other thing, I sent a picture of the Royal Bank over here, and very interesting. And I want to talk about greed and fear here for a minute, because here, the high mark was about April of last year to where we are today, and that's about a 17% decline, which is significant. Royal Bank is a great earner. What is interesting about that story is that in September, the Royal Bank posted the highest ever earnings for a 1 year of any corporation in the history of Canada. They earned $10 billion in 1 year. And their stock price is down 17%. So a lot of the people that I was talking to in the industry are saying, this is great, we're buying right now, we're taking advantage of things. That is interesting, because the Royal Bank is doing well, and yet the stock's down. So part of that was foreign money leaving Canada. If they owned the investments in Canadian dollars and owned oil, people think of Canada and oil, let's just sell it. And a lot of them maybe own the TSX ETF. Well, when you do that, you're also selling the banks. So great companies, good to own, but people are selling them because they were getting out of Canada. So good opportunity for people here in Canada to get ready for the next upcycle.
Okay. How long do you think, I mean, nobody can predict this, of course, but with oil so low, could it go lower even more? I don't know what's trading at today, 30 something?
28 and change, yeah. That's a very good question. And there's a lot of really big players digging their heels in with oil. Saudi's one of them. They're using a lot of their cash reserves to maintain this level. And they're not backing down. You know, we've got Iran introducing new oil into the world. It's really hurting countries like Russia, where a lot of their government is funded by oil revenue, and to have this happen. So there's the one thing about oil, though, they've cut off all exploration now. They're saving money, and the greatest cure for low oil prices, as I said before, is low oil prices. So when it breaks, you're going to see oil probably run to the upside pretty quickly.
Okay, we have a question of the week. We don't have a lot of time left, so if we could put that up on the screen as well. There it is. I am retired and taking income. How do I deal with market volatility? Good.
Okay, that's a great question, because there's a lot of people, they've already retired, they're not making money anymore, and yet they're having to take money out. So first of all, the answer is take the money from your least volatile asset. Hopefully, in planning for retirement, you've got a portion of your portfolio that we call a cash wedge, which is not exposed to the market. In times like these, you want to be using that for your income, rather than having to sell, for instance, Royal Bank stocks at a 17% discount to where they were just in April. When you're drawing income, you don't get that money back. So strategic planning, I wouldn't be making radical moves now, but once we come out of this cycle, if you're not set up that way, perhaps it's time to have that conversation with your advisor and set up and say, how do I protect?
Okay, fair enough. All right, out of time. Thank you for being here today.
Thank you. Great to be back.
Great to have you back. Information on the screen, abbottwealth.com, as well as the phone number 372-3736 if you'd like to give Mark a call, talk to the team. We are back in 2 minutes. Stay with us.